In this video, I'm going to show you how I use support and resistance in my trading strategy on this live trade. I'm going to share with you a trade that I have got live, and we're going to reverse engineer and how I place the trade using support and resistance as my main indicator. ADJPY, this is my watch list here on TradingView, so we'll pop that out of the way for that. Just going to let it load. So this is the current trade we've got running, which is currently sitting at 6% in profit. So that's what we've got running at the minute. If it will focus, we got no.
80, sorry.
£4,285.
Yeah, I wasn't bad off.
We're at. You can camera back ready, Sam?
Yep, there.
Beautiful. Right, let's get on to that. So this
mine in the background. I was just doing a camera in and doing some bits of stuff.
So that's what the let's reverse engineer from here. So what we're looking at here is we're now going to go back to the weekly time frame and work out where our support and resistance is and how we're going to use that to then set this trade up and then work out how I place the trade from there. So we're just going to reverse engineer everything that we did. So we're going to go weekly time frame. What we're looking for is we're looking for support and resistance, so key weekly zones where price has come to test that zone. Biggest thing you see here is where you can see I've got them all marked in grey. I normally have 3 or 4 marked on each currency pair. They are a zone, they're not a line. So in theory, you've got to think more of your support and resistance like this here. So use this triangle here. For this bottom one, it's going to be look something more like this as a zone than a perfect line. So it's never ever going to come and meet your line or zone perfectly. It's just thereabouts. It's just telling us that in that price gap, price may reject this zone because it's done previously before. So what I'm going to do is I'm going to mark out my weekly zones or my support and resistance. So as you can see here, if I get rid of where he's at, I've got this weekly zone marked down the bottom, or my support. So my support is what the trade is trying to drop through and it's holding everything up. Obviously resistance is where price is trying to push through and it's resisting that. So we had price come right the way down on the weekly time frame, test this support zone here, and then what price has done, it then decided that from there price action was going to reject that zone, reject the weekly area and push all the way back up. We then pushed back through the second weekly zone, or such as would have been resistance. Now come the new support. So that second zone was the resistance zone. Price was testing that, and then price did break through that zone. So once his price just broke above the zone, then something like a sell trade would be out, because you don't really want to obviously trade through the zone. You only want to trade in between the zones, if that makes a bit of sense to everyone. So then, now we're looking here, now we've broken above this weekly zone, or the support, which is now resistance. We're now looking at where price is going to continue to. That could be the next zone, which is up here. But we also have the weekly 50 EMA, which is probably going to be more of our next target. So instead of trying to trade right through that, we are just going to trade up to it, not even up to that, but that's where our target is going to be. Before we say, right, we want to get out of the trade and we don't want to trade through that stronger zone. So if we now drop down to the daily time frame.
Why wouldn't we trade right up to the EMA, Jack?
The reason that is just because price, again, because it's a zone and not a perfect line, price could come 15 pips, 20 pips, whatever it is, off of that zone and then completely reverse on the price action and on the movement. So then you end up getting taken out of the trade either at a break even or a small profit, where you would have hit TP if you weren't being greedy. So then what we're looking for, now we've got our support and resistance or our weekly zones marked out. What I'm going to look for, and what I do is then I'm looking for daily or 4-hour time frame structure. So this setup here is called an MSB, market structure breakout. So we're trying to find the market structure first of all, and then we're after the breakout of the structure where you can see price is going to move in the direction that the structure is telling us. So what we've got going on here, inverted head and shoulders. So you can see we've got here left shoulder, head, right shoulder, shoulder, head, shoulder. That's why it's called an inverted head and shoulders, because it's upside down. If it was the other way, it would just be a head and shoulders. So you can see here price rejected the weekly or the support right the way up through, broke through the resistance and created this as new support, and then it come up to our previous highs here. Then when price pulled all the way back to test the weekly zone, it did break through the weekly zone, but then come back up above, and that's what we was waiting for.
It's just a zone again, isn't it?
Yeah, so you can see clearly this weekly area. So if you mark this, obviously don't try not to get confused between my neckline and the that zone that I'm marking out here. But the zone is something like, well, it's even bigger than that, isn't it? It's more of something like that is what we're looking at on that zone, where you can see the wicks over this side and over this side here, where prices has rejected this area multiple times, but at different points, but within that zone still. So this is where then it gets down to where you can get your really good entry, is trying to enter where price is now happy to turn over and push the direction that it's informing you about, because there's plenty of entries here, but then you would either got taken out of the trade because price come back to test it again, or you've had a really big stop loss, not giving you a great return on your trade. So again, once we've worked out what our structure is, which here was an inverted head and shoulders, we're then going to fine tune it to get into the entry. So we've got a couple of minutes on that.
Taking the trade, Jack, or just for the people here, just because the right shoulder here is lower than the left shoulder.
Normally we look for that, and that's another stronger confluence. We can add that in. So as what Sam is saying here, if I delete this, is, where are we at? If you look here, these two are lows on the left shoulder. If we pull that right across here, you can see that the right shoulder has actually taken them lows out. And that's a really good strong confluence to show that price is creating that right shoulder, but then it has rejected that zone as well. So sometimes you're not always going to get that, and the right shoulder will be less. That's not to say it's a bad thing and you shouldn't enter the trade. It's just another clear confluence. If price has done that, created an equal to or a lower low than the other shoulder, that just gives you a nice better return and a little bit of a confluence that price is going to turn the other way. So now we're looking for a long trade, or we're looking for bullish movement. We're looking for price to move upwards in the market. That's what the inverted head and shoulders is telling us, that price is now going to reverse over. It created a equal to high here. Price pulled all the way back. So what I would have been doing is looking for here. So this is called Fibonacci, which is a retracement. So just to see how far the movement or the run of the trade has pulled back. So in theory, we're going to start right down the bottom. I always do it on the first like bullish or bearish candle. So in this instance, we're looking at the bullish run. We're looking up for the upwards run. So we're going to start right at the bottom here and pull this all the way up to where price finished up, which was there. And you can see right there, we've got these numbers down the side. If someone doesn't know what these mean, we're going to explain that now. So these are percentage on how far price has pulled back in that run. So as you can see here, price pulled right back to the 382 fib. So 38.2% of that 100% run, it's pulled back to. We need to see that as a minimum. Ideally, if we can say 50% is normally about right, but because we've got the inverted head and shoulders here, you can see price just caught that low, created the lower low on the right shoulder, and then moved.
The structure was telling you that it wouldn't go down to the 50% within reason, because it's already taken out the left shoulder clearly, but like you say, it's not going to really pull right down to the 50%.
Yeah,
because of the way the structure's showing
correct,
you
yeah. So price, for instance, if I get rid of these two, so we can see what's going on, what we're saying is price from clearly here wasn't going to come right down into this sort of area and then come all the way back up, because it had the rejection over here. So if this was a lot bigger left shoulder, you'd end up normally with a bigger right shoulder for this sort of structure. So we've still got our weekly zones, support and resistance here, and then we're trying to come back up. So this is now our support, and we're looking to come up to not the resistance zone, but that would be there if the weekly 50 wasn't in the way. What we're looking to do, and that again will come into our next strategy, is where we would trade on from that to that weekly zone once we break the weekly 50. So we're going to drop down to get rid of this now, so it's easy out of the way. We're going to drop down to the 4 hour time frame. This is where we can get really fine into stuff, and then our entries are normally on the 1 hour time frame. As you can see here, price give a lovely bearish run all the way down to the weekly zone or the support. Then price give an instant there, which is a railroad tracks, lovely setup on the 4 hour time frame. That is another candlestick confirmation that price is going to turn over. But Price hadn't done a big enough test. There was no major wicks. It just comes straight down and up. Very, very unlikely price is going to just push off of this. We need to see a little bit of consolidation, a little bit more price action going on before the price itself was going to roll over and then go into bullish movement. So what I was waiting for was an inverted head and shoulders. So as you can see, we had this again. So I'm looking for a inverted head and shoulders on an inverted head and shoulders. So we had the daily time frame inverted head and shoulders. Now I'm going to try and look for the 1 hour or 4 hour on that right shoulder to try and fine tune my entry. So I've got a double structure in one setup. So you can see clearly here, if we now bring these back out again, I'll mark the shoulders for you. We had left shoulder, head, right shoulder, which was here. What happened there was we had a double shoulder there, but price was not above the 4 hour 50. So I didn't want to trade through the daily 50, through the 4 hour 50, and through that weekly zone or the support / resistance that we've got in there. I needed price to be above that and then retest back into it before placing the trade. So as you can see here, I'll demonstrate that now. If price come all the way down to here, we could have entered here, but price then could have just gone there. And as it did, it could have then just carried on going and rolled over, and then nothing would have been valid for us to enter. So with the MSBC, we're looking for that breakout, and then we can see the continuation. We're trying to catch the continuation after the breakout. Price has not broken out just yet. So what we're looking for there is price then come back down again to create a double bottom on that within the inverted head and shoulders. So now we've got a daily inverted head and shoulders. We've got a 4 hour inverted head and shoulders, and then we've really got a 1 hour time frame double bottom on the right shoulder of the smaller head and shoulders. And that's then was like, right, it's setting up, ready to rock and roll. I just need to see the push, the breakthrough, the 2 EMAs and the zone for then to be able to catch a trade. So what we dropped in then, I dropped down to the 1 hour time frame. And for everyone that's still watching this, well done, you're looking into being a full-time trader. This is what live trading is all about. It's all about getting the nitty and gritty in the charts, in the markets. You've got to be doing your back testing to catch the really good entries and where you get really good rewards on your trades. If you're entering things with 80, 100 pip stop losses, you're not going to start getting the fine tunes, the 1 to 5, 1 to 6, 1 to 7 trades that really you want to grab good returns back. And then we had, this is what we had here. We had our little double bottom, bum. Price then decided, which I was happy all about. Where am I looking for my neckline? There.
Let's say, where's your neckline at?
Neckline's coming through here. We're now waiting for price to push up and retest the 2 EMAs and the weekly zone or the resistance once it's broken above. So it was now support at the minute. Price then pushed right through that whole lot, and then that come back to be, no, that was resistance, sorry, and it come back to be support. Now price pushed back in, we're then just looking for our entry. So what we did, as you can see here, price come all the way back into this zone. It did actually just close below on the 1 hour time frame, below that zone again, before then breaking back above. So I needed to be above that zone before placing any trades.
You can tell it's quite strong from the left hand side.
Yeah, you can see that everything here, everything's pushing right through. And then even when it broke below, you can see the multiple rejections, and then it clearly broke above. We had 2 rejections there, and then it come all the way back. It just broke back through again. So I did actually have a 15-minute entry on this pair. So as we're coming in, I dropped down to the 15-minute time and said, right, at the minute, I've got no trade. I need to be above the EMAs before I can place that trade, then to get my stop loss the other side of the EMAs so that I knew I had a decent barrier for price to try and break through. Because the idea is, with your stop loss, if you've got a clear barrier here, you don't want to put your stop loss on the barrier. It needs to be behind the barrier for a long trade or for a short trade the other way. So the price has to break back through the barriers, and we try and stack like 4 or 5 barriers in a line so that price has to break through all them barriers and then take you out the trade. Just makes it obviously a lot safer to trade, and you know you've got a decent support there. Even if price does go into a stop, you know it's got to break through them zones. Once it's broke through the zones, then you know, right, the trade is no longer valid. It's just going to take me out, and then I'm happy to step out of the trade. So that's where really big part is where you're putting your stop loss on your trades. Let's look to the 15-minute time frame. This is the lowest time frame I will use on both the MSB and the MSBC. I do never go any lower than 15-minute time frame, and that will only be for entries. I never ever use it for analysis. It's only the 4 hour and the 1 hour that is used to set up the trade. So normally daily or the weekly and the daily is to set up the support and resistance. The 4 hour time frame is normally where we get our structure from. The 1 hour is where we then look fine tune and get an entry, or if not, like we are now, I've even dropped lower to grab a better entry on this pair. So as you can see here, we then had another inverted head and shoulders on the 15-minute time frame, rejecting the weekly zone, the 4 hour 50 and the daily 50 in there. So as soon as price come all the way down here, you can see it was still above. I couldn't accept that. We had a nice little push up right the way there. We had this little minute pullback and then in, bang. We was in this trade right there is what we was in for. I actually was on just on that trade there. We had this engulfing candle here. So
you're going to let that one close?
Yeah, I would ideally a nice entry would have been here, as you see this one. If I zoom right in, this would have been a perfect entry. You can see we had this bearish candle, this big long wick. That then was a bullish candle, and then right the way through here we had that lovely engulfing candle. That there would have been a beautiful entry. So thank you very much for watching. If you want to follow on from the trade, I will be updating everyone on the Limitless Trading Club Instagram.